welcome to our webinar on the state of the commerce economy and the focus on tariffs and what implications those have. Some micro data on like what's really happening on sales, but also a macro view of what's happening in the M&A markets.
So today we're going to really talk about how Rakuten Advertising is really trying to stay ahead of the curve a little bit in terms of what we think is happening at the macro level across all of our markets. Apparel and accessories, this is a big one for us. In over a third of all U.S. apparel and more than half of our shoes in 2024 came from China in particular. As you can see, almost 80% of all toys sold in the United States come from China.
And as Chris said, it's actually less about the tariffs and more about consumer perception right now. And so even the sort of February 1st, I think people started talking about tariffs from Canada and Mexico. And so this is concerning for everyone in e-commerce. And we'll continue to watch as the year goes on. What you're looking at here is growth drivers. So we pay a lot of attention to basically the three things that can grow your business: seller growth, order growth, and buyer growth. So typically, when economies turn down, people shop more frequently, but smaller baskets. And that's kind of what's going on in grocery. Also a little bit buyer saturation, but still able to grow through tremendous sort of stickiness in the category. TikTok year over year, I think, is up something like 70% in dollar growth. So really propping up sort of that space or that category right now. But electronics, it's a broad category, but if you think about it, it's really cell phones, computers, and TVs is kind of what drives that business. I guess video games. And that's kind of what's dragging down this dollar growth. Is gaming's had a little bit of a rough start to the year, and mobile without any real new devices to sort of excite consumers. But what we find out is, generally speaking, about 60% of people either are significantly or moderately impacts their spending in terms of influence around these deal and coupon sites. So it turns out that people really are quite, particularly at the higher income levels, and we think that's because a little bit more financially savvy possibly, and they realize that actually 0% interest for 3 months in staggered payments is actually a pretty good deal.
And I don't know, it looked like orders were up, but sales and consumers, I guess, like checkouts and individuals were flat.
I don't know how the cookie costs $10, probably being a private club and they can charge whatever they want. But
I mean, if I told, Chris's daughters that for every dollar they spend on the iPhone, they got, $1.50 back or whatever, you'd get a much more expensive iPhone.
There's been a lot of transactions on the agency side, right? As agencies scale up their capabilities to both work with, manage, and launch creator-led programming around product partnerships and things like that.
Is this are things being valued correctly now, or are we kind of in a place where the M&A is happening because of the valuations or something else, or a bigger TAM?
And if you can combine those businesses, you can basically extract the margin that happens between when that customer is handed off right now between those two different companies.
And that utility is a means of maybe getting to the things that you're interested in that reflect that taste, but it never really replaced it.
And so I think the way the publishers continue to exist and grow in value and not lose market share is sort of adapts. And I think there's a resilient nature to good brands that still produce quality content, that still have high engagement, that can exist well into the future.
I do think we are interested in really helping publishers reinvest in their existing clientele and invest in better understanding their own audiences. So I do think the creator industry is obviously massive, and it's definitely having its moment and influencing how everybody else behaves in a lot of smart ways.
And the most surprising thing to me was that you'd think that AI and LLMs were going to be this existential threat that was all the people were talking about. And it occurred to me that at least in the affiliate space, people are really good at figuring out kind of how to optimize whatever is out there.
I mean, the reason why I think that's because whenever you're trying to figure out where the market's, I think delinquency rates are one of the best indicators because people will always pay for what's most required.